Okay, recording started. Go for it, Noel.
Good morning, everyone. Again, thank you for taking the time to join us today. Just want to give you a little bit of a background to how we got to here today. I reached out to Lisa several weeks ago, and I said, Lisa, hey, is there anything the designers and architects can do in the next month or two to wrap up their year so they're all prepared for their conversation with their CPA regarding 2020 taxes? And she says, yes, absolutely. And we talked about the obvious things about being organized and detailed oriented and all that good stuff. And then I said to Lisa, can we put a bit of a PowerPoint together and do your thing? And she went, absolutely. So here we are today. I think the next, listen, we're all going to pay our taxes next year, but we want to pay it with as least stress as we can. We want to get bang for our buck because if we're not organized, and we bring a box of receipts to the CPA, he or she will get your taxes done, but they'll be charging you by the hour. And you'll be stressed because there'll be lots of loose ends. And obviously we don't want that. So Lisa's going to show us how we avoid that scenario, guaranteed by Lisa Wynn.
Oh God, no. Thanks,
so Lisa, go ahead, do your thing. And what do we need to do between now and December 31st so we're ready for our 2020 taxes?
All right, sounds good. Thank you, Noel. And what he had failed to mention is that there was a lot of begging for this, okay? And you promised me happy hours, wine on you. So this is why we're here, because after this session, you all probably would want a glass of wine. We're talking about accounting here. So I'm going to try to make it as lively as possible. But the motivation to really attend this meeting is just like Noel said, the content that I put together here came from a lot of conversation I've had recently with the CPAs, enroll agents, basically the accountant communities. And the vibe that we get is that everybody is very worried because 2020 has been such an unprecedented year. And there are, anytime the government try to help out small business, the consequences of it is the tax community, the accounting community get to file the taxes and interpreting the law and worrying about compliance. So the accounting community is for those CPAs that are good CPA, meaning the people who can defend your tax returns if you ever get an audit. Those are the people who are very worried right now because they're thinking about the time. They're worrying that they have a limited of time to file taxes. And there's just so much information they anticipate going back and forth with small business that they are actually hiring a lot right now. So if you have, relative kids who want to get into accounting, this is the time to be looking for a job because a lot of accounting firms are hiring, anticipating that they are going to need the help. And with that is billable hours, right? So someone's going to have to pay for that additional staff that they have. And as you know, CPAs, tax filers, they work on billable hours. So the objective for this session today is I'm trying my best to prepare you so that you don't get hit with a huge invoice from your CPA come tax season time. So let's just go over the agenda really quick. So one of our Smart Bean mission is to revolutionize the relationship between the small business owners and their numbers. And what that means is every session, every time I do a presentation to small businesses, I always want to get back to the basics of a couple things, a couple numbers that I think small business owners should really know. And so the same go today. We're going to have three different items on the agenda. And the first one would be to talk about the three numbers that I think small business owners should know at this point in the business. And then after each of the session, we'll have a Q&A. So this session is for you. No want me to put together to present some information, but mostly is for you to get your question out there. So I will introduce the person that will gather your question in just a moment, but we're going to have a Q&A after every part of the presentation. And then the second part of the presentation we'll go into is, let's talk about the different stimulus program that we've had this year, and I would imagine continue to have in the coming months, years. So let's talk about what they are, what are the different tax implications of it. And then lastly is your checklist for the year-end checklist. And this is where I'm going to send you the presentation, the copy of this presentation. On this presentation, we have the year-end checklist that you can use to prepare yourself for closing out 2020 and start fresh next year and get ready for tax season. And of course, like I mentioned, we're always going to have a Q&A after each part of the presentation. So speaking of Q&A, I would like to introduce you to two of my associates, Candrea Romero and Victor Constantino. They are attending right now. So if Victor and Candrea, if you can wave to everybody. So Candrea and Victor will be taking your questions. If you have a question, please ask it in the chat section of Zoom. They will look at your questions and then they will bring it up at the time when we have Q&A. So far so good? Any questions?
Perfect.
We're good, Noel?
Fantastic.
Okay, great. So let's get right into it, right? The three numbers. I think it's pretty straightforward to say that in order to have a successful business, your eye needs to be focused on sales, right? And so it's important to focus on sales. It's important to know the gross revenue, but from an accounting standpoint, my job is always to try to protect you if you ever get an audit. Above that is understanding your business. So a good checklist for you, just a self-checking for you is when you go in and run your profit and loss report and you see the gross revenue, this is before cost of goods sold, okay, the sales number. Run the report by month. And if you look at the sales number, whatever that sales number is, that should be the same or come pretty darn close to the deposit that you put in the bank. Okay, now from time to time, especially this year, you might have situation where you have to put in your own money into a certain month to be able to cover rent, right? That money should not be in gross revenue. That money should be coming in as shareholders or owner contribution, should not show up on your profit and loss at all. Should not be anywhere on there. Because if it's on there, you're gonna be taxed, there's tax implication for it. So look at your gross sales number, make sure that everything's in there was in fact sales and not money you put in to keep the business running. And if you've used IV or any other software to manage your sales and generate invoice, do yourself a favor and run a report from Ivy and see what your gross sales for that month's supposed to be, right? And see if that is reflecting in your accounting software. The second number you want to think about at this time of the year is your liabilities. So all of you, I would say most, if not all of you, are interior designers and you have sales tax that you collect from your clients. So the amount that you deposit into your bank, it might be classified as gross revenue, but part of that might be sales tax that you need to pay to the state. So to handle the book correctly, you want to make sure that you separate what was the actual sales and what was the sales tax as a liability. You don't, that money is not yours, even though you're not paying it yet. Some of you are on a monthly, quarterly, semi-annual schedule. Those sales tax numbers, though, you need to be aware of them, because just because it's sitting in your bank account, it's not your money, and it's gonna leave you eventually. The other part you want to think about is payroll. is this. I don't know if any of you guys have taken advantage of this, but part of the CARES Act this year, part of the Stimulus Care Act this year, is the ability to defer paying the employer portion of the payroll taxes, the Social Security and Medicare. I'm sorry, only Social Security, 6.2%. Okay, that amount, that means that, yeah, your payroll numbers for this year, if it looks like it's less than the previous year, it doesn't mean that your tax went down. It just means that you are deferring paying it. So there's a liability there, and it needs to be recorded on your balance sheet, and you need to account for that. The other big one this year is rent, right? So when the pandemic hit, there was a lot of people struggling with paying the rent, and so I know some landlord was more flexible than others. Some allow you to get out of the lease or forgive your rent. Some don't, right? So what if you have not been paying your rent? You need to give that some consideration, because if you haven't paid it, it wouldn't probably not show up on your profit and loss, right? Because it hasn't paid. Most of you guys are cash basis. So if you haven't paid the rent and it has not been forgiven, so that the landlord did not give you any official paper that said it's forgiven, then it is a liability on your account. So depending on your accounting method, whether it's a cash or accrual, you might be able to write that off this year, or you write it off when you actually pay it eventually. But wherever it is, it needs to be recorded and counted for when you file your taxes this year. Lastly is the taxable income or loss for this year. So the formula, as you all probably already know, is, take the gross revenue, subtract out any cost of goods sold, subtract out all the other operating expense, is your net income, right? That's pretty straightforward. That's how it has been. The problem with this year is you need to also consider the PPP forgiveness, because the laws say Paycheck Protection Program loan, or the amount, is not taxable. That's correct. But the expenses that you use when you apply for forgiveness, whatever your loan amount is. So let's say you had $50,000 in PPP loan amount and all $50,000 was forgiven. That $50,000 from expenses, maybe it was from payroll, maybe it was rent, utility that you used to supply to the lender to get your loan forgiven, that amount is not a deductible expense on your profit and loss. So what that means is, the easiest way to figure this out is that, okay, I have gross sales, I'm subtracting out cost of goods sold, I'm subtracting out all my expenses, and then I need to add back in the expenses that I use to submit for the PPP loan. That would be your net taxable income that you have to pay taxes on. So in a roundabout way, even though the government say the PPP is not taxable, it technically is, because you can't write off the expenses that you use to get the loan forgiven. So that's what I have so far for this slide. Do we have any questions? Is everybody still awake?
To pick up on something that you were just saying, Lisa, Kim had a question. She had received an SBA loan, and how does that affect her overall tax implications? Okay, so hi, Kim. The SBA loan you are referring to is, I am assuming it is the EIDL or EIDL loan, Economic Injury Disaster Loan, because technically the PPP and the EIDL are both SBA loans. They just the way it's being distributed is differently. But most people, when they talk about the SBA loan, I think they're referring to the EIDL loan, which is an actual loan. It's not forgivable, right?
So because I'm actually gonna mention that on the next slide, but I'm just gonna answer your question right now is because it is a loan, it's a long-term liabilities, and it will be on your balance sheet. And the taxes, the interest that you are paying on it will be tax deductible. But we all know that you don't have to start paying, make the payment until next year because it's 12 months deferral from the time you receive the loan. So you don't have to worry about it right now. That loan for 2020, there's technically no tax implication because it is a loan that you got, but you have not starting to pay it back yet. So you cannot write off the interest on the loan. And it's not a taxable income for you because you actually just borrow money. No one give it to you for free. So I hope that answers your question.
Hey, Lisa, I have more of a comment. Even though we're just in the first section, and it's like, wow, there was just a lot of information even in the first section, and it's overwhelming. To be honest, I'm here and I'm like, oh my God, this is so overwhelming. So if anyone is confused, just assure them and they can call you to go over their own specific situation in the next several weeks with the consultation or something. Because right now, I'm kind of sweating bullets with all of this stuff. So,
that's a lot of sharing, Noel, but I'm used to it. I don't know about the rest of you, but totally get it though. You know, this is my full-time job, right? So I talk about it like, oh, it's like my breakfast. I love talking about this stuff, but I totally understand. It's a lot of information, and we did anticipate this, that you will have more questions, and maybe it's more specific to your situations. So I told Noel that I will, after our presentation, with your permission, I will send you an email with a link to my calendar so that you can schedule. I'm going to create a special link so you can schedule time with me at no charge, just to review your books if you would like. But just please be prepared. Like, we're going to talk about the kind of thing you will need to have. For example, get ready if you have QuickBooks, for example, get ready to show, to screen share and show me your QuickBooks, because I want to be super efficient on that time that we have together. I'm going to go through your books for you and tell you exactly which area that you might want to look at, how to fix it, how to prepare for it. There's no obligations. I'm just happy to be able to help you with this. So yes, we will be, I will be sending out that email with my calendar. So do not worry. And like, ask questions. This session is for you. Don't worry about whether or not it's going to apply to anybody else. Chances are it does. So do you have any other question, Kendria and Victor? So good so far.
Yeah.
So everybody's like, forget it. Just schedule time with Lisa now, right? So the next area that we're going to talk about is the different stimulus grants and loans that you might have received this year. So again, this is, if you do this right, you are going to help your CPA save a lot of time and back and forth question. And every time they send you an email or give you a call, that is billable hours. So let's really understand this. So I separate the different stimulus program into 3 different buckets, let's say. First and most popular one is the Paycheck Protection Program, the PPP. So right now, a lot of lenders are already starting to accept applications for forgiveness. And they started actually back on August 10th is when they are able to start accepting applications. I know that for a lot of my clients who, for example, have Bank of America, and if their loan was under $50,000, Bank of America have not allowed them to submit. They have not given the link to do that. So what you might want to do is, but don't be mistaken, just because they didn't send you the information or you missed it in the mail, that is not an obligation, because when you take that PPP loan, you sign a promissory note. with them. It is a loan. It's a 1% interest, so it's not bad, but it is a loan and you would need to pay back. So keep an eye out. I would go back into your email right now. Nobody is calling anybody. The bank is not calling you and they're not taking your phone call either. They just get, because your loan wasn't $10 million. That's why. So do yourself a favor, go into your inbox and search your email for anything that comes from your bank, right? Anything that remotely regarding PPP. If you want me to look at it with you, schedule that time, I'll look at it with you. But here's the latest in PPP forgiveness is, I believe, earlier this month, the SBA have released a new form, the 3805S, okay? So before this, they have two other forms. They have 3805 and then 3805 Easy, and now they have a 3805S, and for small business or small loan. So anybody that had a loan of $50,000 or less can use this form to apply for forgiveness. And what they've done is they make the form just a one-pager. It's basically an affidavit saying that you have used the loan amount correctly, blah, blah, blah. The thing about it, though, is it looks like your lender, depending on the bank that you have, they are still asking for information to back up your forgiveness amount. So you will still need to supply your payroll reports. If you were using part of the money for utilities or pay rent, they still need to see those receipts. The good news is I don't believe that they're actually going to go through and really scrutinize the documents if your loan was under $50,000. They just want to have the information to cover themselves. And basically the government have made it really easy for really small business with the small loan amount not to be a burden for them to ask for forgiveness. So with that said, 100% of your loan should be forgiven. If you don't think that you would be able to, schedule time with me. Let's look at your books and see what expenses that can be qualified for that to get forgiven. Okay, so going back to the books, when you receive the money from the bank, when they fund it to you, that is a loan, and therefore it needs to go on to your long-term liability. So right now, unless the bank is already giving you the okay, or some kind of paperwork, some kind of approval saying that your loan was forgiven, it needs to show up on your balance sheet, not on your profit and loss. It's not an income to you yet. It's still a loan, just like the idle loan, okay? If you were forgiven, if the loan was forgiven, then that amount show up on your profit and loss as other income. Now, earlier I told you PPP is not taxable. So why does it have to be on your profit and loss? The reason for that is the profit and loss captures any income or expenses that come in and out of your business. So you do need to have it on your profit and loss as income. It's just not your primary income. So if you look at your profit and loss statement, the PPP loan amount, the forgiven part should be at the very bottom as other income. And you put it there and name it really good so that your CPA know what it is. Just say PPP forgiveness amount, let's say, so that there's no question about it, that you already got it forgiven and it's on your profit and loss, so then the CPA know what to do, or the tax filer know what to do with that. Okay. Let me just stop here real quick. Is there any question right now on this part? Is everybody still out there?
Yes.
We're still here. No questions as of yet. I just prompted them.
Okay, good. So then let me move on to the second part is the idle loan. I think, Kim, I think this was the loan that you were asking earlier. So right now, this idle loan, you should not see it on your profit and loss report. It's not affecting your income right now. However, if you also got the advance, right? Remember the idle, how they ask how many employees you have, and then they give you $1,000 for each employee up to $10,000. So that amount is always a whole amount, whether it's 1,000 is the minimum, up to $10,000. That is they call it the idle advance. What it is a grant. It was given to you. You don't need to do any reporting for it, and you do not need to pay it back. Okay, that for sure needs to be on your profit and loss. So if you have messed around with the SBA this year and get any kind of deposit into your bank, make sure that you look for all those $1,000, $2,000. Make sure that it was classified correctly and that it came in as other income, and name it idle grant, just so that it's easy for your tax filer to know that you have distinguished that's not the loan amount, it's a grant, you don't have to pay back. Okay. The loan amount, if you actually took the loan, because they offer it to you, but for a lot of business, they didn't accept it. But if you did accept the loan and you get the money, it is a 30 years loan, and it's at 3.75%. You do need to pay it back. It's 12 months deferral. So you have to pay it back until starting next year. But it show up on your long-term liability on your balance sheet. Has nothing to do with your income this year. Okay. And then we have the third. So is there any questions on this, Lo?
Mm-hmm.
Good. Okay. So then with the grant, I've seen this happen. And if you have not gotten into this, let me know, because for every state, there are also money in the CARES Act, okay, that was given to local, city and state governments to give out as grants to the community. So in Southern California, we have SBDC, is a great nonprofit organizations that help facilitate a lot of these grants that you want to be on their mailing list. For other states, they have similar, and some of the states I know in Georgia is the same. They call it by the same for the SBDC. I don't know what it stands for, but so make sure that you look at if your business has struggled because of the coronavirus. There are grants out there that can help you, and so these grants are just money that you have to apply for it. And a lot of them do have requirements where you have to give them a quarterly report of your financials to get the grant. So you get the grant, but these are grants. So they go in as other income, show up on your profit and loss. You do need to report it because these grants are being reported to the IRS that they gave it to you. So if you don't report to the IRS that you receive it, that's not a good thing, right? It would trigger something. So make sure that these grants are being recorded correctly, that they are other income, and name it however the grant is. So like in Orange County, there's a OC layoff aversion plan grant, right? Name that and just make sure, as long as you have the word grants in there, it's really going to help your tax filer identify what it is. Also pay attention to this. A lot of, I would say, all of the grants require you to do quarterly reporting, meaning sending in your financials, at least your profit and loss, and how you spend the money to them. And typically they ask you to do that for like a whole year. So when you're taking these grants, make sure that you look at what the requirements are and that you have the information to send to them. This is the year that you definitely need to have your financials up to date for these kind of things. Okay, is there any questions so far until we move on?
Hey Lisa, again, I've just got a comment regarding back in March and April when the stimulus plan first came out. It was a very chaotic, lots of bad press, it was disorganized, and probably a lot of people were intimidated, especially as small business owners. They didn't have the time, or they weren't able to follow through with the documentation process. Because I have a feeling that there'll be another stimulus in the coming months. And if you're a small business owner, you really should look at it, because this is a great opportunity for cash flow, or just to plan ahead. That's my point. That's my personal opinion. It's, if you missed the boat last time, it doesn't mean you have to miss the boat next time.
Correct. And it's not too late. Like, just really right now, I assume everybody already have 2019 tax filed. If you haven't, we can help. We actually do a lot of catch-up work. We have clients that come to us now that actually go back several years, right? So it's totally fine. I believe the EIDL application is still open. So if you have not gotten that loan, it's a great loan, you guys. 30 years, you don't have to put down any collateral, okay? You just give them your gross revenue, your cost of goods sold, and then they determine how much they can lend to you. And then it's 3.75%. They do check your credit score, though. So even though they don't ask for collateral, they do check your credit score. But it's a great loan for cash flow, just like Noel said. Okay, so let's move on to the last section. I know this looks really scary and small. I might need my glasses, but I will email this presentation out, so you will have it as your checklist. But what I want to go over here is I kind of separate the list into two parts. The first top part, if you have been on top of your accounting all year long, let's say if you do it yourself, or you, oh, my phone just fall out. If you do it yourself, or if you have a bookkeeper to help you, then the top three sections, you really don't need to do anything, because that's already should be in the system. The bookkeeper should have most of it, or you probably have it already. But let's go over them anyway. And then the bottom three section is what you should do now, once you already have the top parts complete and straightened out, okay? So the first part is financial reports. And please keep in mind that everything I talk about right now is business related, not personal. So in order to prepare yourself to file your taxes, you will also need your personal information, like your mortgage statements, your tax, your property tax that you pay. Those are the things that you normally give to your CPA. I'm only focusing in the business right now. So for financial reports, I would, you probably have this already, but organize these documents into your 2020 tax folder, right? Electronic or paper. I would say electronics and save it's because it's easier. No one wants to meet you now, so you might have to send everything electronically anyway, so just scan them in. So make sure you have all your bank and credit card statements for this year. This is something that, as I am helping small business catch up on their books for previous year, it is so important. Even if you don't work on your book monthly, download the statement monthly. Save it to this folder, okay? Because you never know when one day you decided to change bank, because the current bank, it just did not deliver on the PPP loan, for example. If you change bank and you close that bank account, you lose those statements. To go back to them and try to get it from them. One, you have to pay them a pretty hefty fee. Two is they don't want to help you, because why would they help you, right? They have other priorities. So do yourself a favor every month, even if you don't update your book, please download your bank and credit card statements to this folder. So make sure you have all that together. Grants and loans documents. I know this is an area too. A lot of us are 2020. We're just trying to stay alive, I think. And so we get these grants and loans, and there's just so many of them. It's confusing, and we have information everywhere. Luckily, most of them are on electronic forms, right? Because during the coronavirus, those months, you're not meeting anybody in person. So you probably have them all somewhere electronically. Just put them in this tax folder. Any loans that you take out this year, including, let's say you buy a car because of the tax law that allow you to write off the full amount this year. That's something else. But if you buy a new car this year, make sure you bring it up to your accountant. You might be able to deduct the full amount, even if you haven't paid, make the payments for it. Even if it's a 3 years, 5 years loans, you can possibly write the full amount off this year.
Wow.
Yeah, any loans, any grant, do that. Payroll reports, another area that I feel not only business owner miss this, but a lot of tax filer miss this too, is that when the payroll is run, and let's say you write a check for an employee because you run payroll late and you didn't make the direct deposit, or they just prefer checks, however it is. They write checks, and then when you get that money in, the check in cashed, somebody didn't put it in the right place, didn't put it into payroll expenses. Now it's to contractor expense, for example. The write-off is different, and payroll is the one area that is the easiest for the IRS to audit you, because payroll company has requirements. You have requirements to report the payroll expenses quarterly, right? So they have all that Form 941, 940, the state form. It's so easy for them to compare that report from the payroll company versus what's in your books. So make sure that's correct and have all those reports and it's matched what is showing in your books. 2019 tax return, we have that so that you can reference back, okay? Account reconciliation, I'm gonna go over this kind of quickly, is that the big one is this. A lot of us are small businesses, so from time to time, you can't help it but pay for a business expense with cash or with your personal credit card, your personal bank card, and then you tell yourself, oh, I'm gonna go back and record that, or later, I have the receipt, right? Do you really think that your CPA is going to go through every single receipt you have in your shoebox at tax season to make sure that it wasn't paid from a credit card in the business, but paid by you personally? So do yourself a favor, look through your personal credit card statement, think back and say, hey, did I pay for any of this stuff, any business expense from a personal account, and record those into your books so that it can be written off.
And Lisa,
yes.
this is where you hand out a little bit of tough love, because the reality is people shouldn't be using their personal cards for their business, right?
No.
So tough love.
Tough love. And you shouldn't, but it happens. I mean, I'm not mean like Noel. Like, I have clients who come to us and then have that. I mean, commingling is something that is so common with sole proprietor business, small business. I advise against it. I always say, you can open, I know sometime I've heard this excuse, is that it's such a pain because the bank, in order to open a business bank account, you need, if you're a sole proprietor, you have to go to the county and file your DBA. They want to see that in order for you to open a business account. But there's way around it, right? You don't have to have a business account for your business. You can just have a bank account or a credit card account that you dedicated for business use. Yep. And that's it. Just make your life easy, right? Yep. But this happens a lot. So don't feel bad. Don't make you feel bad, but try your best not to commingle. And then if you look at your, by the way, I'm so mean to Noel just because we're friends. It was so long. Normally, I like him a lot. He's nice. But so just so in case somebody's like, oh my goodness, I like the presentation, but the presenter is tough. Anyway, so when you look at your profit and loss or your statements, make sure there's no uncategories, anything, right? I know the QuickBooks has a large market share, so chances are many of you are using QuickBooks for your accounting software, or any software really. They always have categories that, to make it so easy, they just put it to uncategorized income, unapplied bill payments, uncategorized assets. Anything that is is not okay. Why? Because it is not being deducted, right? If you have something that is that means it's just staying there in limbo. It's not being counted for towards anything. It's not one, it doesn't help you to know the true picture of your business because you can't tell whether it's income or expense or what type of expense that is. And your tax filer is not going to spend time to try to investigate what they are. They're just going to pass right through it because what they do as tax filer is they look at your profit and loss and they just scan through, right? And hopefully you don't have multiple categories for the same thing. That's another big one that you want to take away from this presentation is a lot of these accounting software make it too easy to create a new category just on the fly. So I have seen books where the client have office expense and then also a software expense, and they put Microsoft subscription on both areas. You're doing yourself a disfavor by doing that because a disservice. Because when the tax filers scan through, they see, oh, okay, software expenses. They take that number and they put it into the books. The tax, how you categorize these expenses have tax implications. Some have a higher deductible than other, and some don't get deducted at all. So make sure that as you look at your categories, combine those that are the same, or at least be consistent with the type of transaction go to the same type of categories. Okay, and then the third item on there is the payroll, right? Are there any uncashed checks? You might write people checks, they didn't cash it yet, or was it reported on the payroll? Make sure the payroll numbers are matched up. A big one to ask yourself a question right now is, if you have not paid yourself on payroll all year, should you be, right? Short answer is, if you are a corporation, like an S corporation, you should be on payroll, okay? You don't have to put all the money you've earned this year and pay through payroll because you have to pay payroll taxes, but the IRS expects you to, expect the corporation to have employees. So if you are a single full owner of the S Corp, you're that employee. You need to be on payroll. They expect to see it because they want their payroll taxes. The reason you get incorporated or elect the S Corp is because there's tax benefit to it. So how much to put yourself on payroll is a question that you can ask me one-on-one. But right now is to think about, if your CPA has been telling you, hey, you need to get on payroll, this is the year to do it. You still have time. You can simply run a payroll this year for the full amount. So let's say you look at your book and you determine that you need to pay yourself $40,000 this year on payroll. You can run a payroll and just for $40,000 gross. And how you do that so that they don't take a tons of taxes out at income taxes. The way the payroll company does this is they don't recognize whether that $40,000 is your total W-2 earning for this year, or it's just a one-time, $40,000 a month. So the way they look at it is they will assume that it's a $40,000 that you make this month. And because they use that calculation, they are going to take a lot of income tax withholding from that paycheck. Because if you make $480,000 a year, they're going to want to take out a lot of taxes, right? So when you run that payroll at the end of the year with a big payroll, my advice is to either ask the CPA what is the withholding amount you should have, a flat amount. So you should always give the payroll company said, take out this flat amount, $5,000 for federal withholding for me only. Whatever that amount is for your tax liability, do that. But don't let them just run it for you, because you will have to go back and redo it because they will take a lot of taxes out. Okay, so big one. Think about
Lisa,
right now.
I'm sorry to interrupt. I just want to make sure that we're keeping aware of the time.
Oh, okay.
10 till 11. So I just want to make sure that we have time for everybody's questions. If I may, Pamela actually had a question earlier. I know you're going to be addressing it when you speak about reviewing balance sheets, but she had a question about a large purchase such as a car and the tax deductibility thereof. Like how does one qualify for the deductibility of a large purchase like that?
So when you purchase a car, if the company purchased the car, it becomes an asset of the business, right? And this is something that you want to make sure that it is showing up on your balance sheet so that the CPA can ask you a question about it, right? Because at tax time, people forget and things get missed. But if it is, so I think it's section, don't quote me on this, but I believe it's called section 719 or 29. So Pamela, I can follow up with you on the exact code for it. But it is an IRS code that said that allow for you to write off the whole, if you have a lot of income this year, you might want to write off the whole amount rather than amortizing it over 5 years. So that is a question that we should have our talk, and also to talk to the tax filer about how to structure it, because it's different from case to case, and it's depending on your business, your income, not just for the business, but the income for your whole family, right? But there is something to that. The only thing I want to mention is just to make sure that it show up somewhere on your financials so that the CPA can have that conversation with you. Okay, and then let me just move forward to is, like I say, bank reconciliation is make sure you use the tools that are in the accounting software to reconcile, okay? For example, in QuickBooks, it is not okay to just simply go in and see that that transaction went through the bank and click the R that is reconcile. That is not reconciliation. That's simply clearing that you saw it went through the bank. Reconciliation is comparing the beginning balance and the end balance in the statement versus what's in your books. So use the tools that they have in the software to do this, okay? Vendor, this is huge. If I don't have any time at all, please pay attention to this one. This is an area I know that for interior designers, you subcontract, right? And depending on who were your subcontractors, if they are a corporation, you do not have to give them a 1099. If they are a person, you do need to give them a 1099. How you pay them also matters. If you pay people with credit cards or PayPal, so those payment systems, you do not have to give them a 1099 because these financial institutions are required by law to file the 1099-K to the IRS. So that's good news. But if you write checks to these people, definitely you need to get their W-9 information, have all that information in there, because, and make a good practice to whatever you use a new subcontractor, you don't care if they are a corporation or not, send them a W-9. Say, hey, until you fill this out and get it back to me, I'm not paying you, because it saves you so much time and headache at the end of the year. And that's an area that get audited the most. It's the easiest thing for the IRS to audit you, and it's get audited the most. Please make sure you get your 1099's information in your book so that you can generate it for them. Okay, moving on really quickly is review the profit and loss. I have it on here. You can read it on your own, but make sure whatever you look at the profit and loss, the point is, one, obviously you want to make sure it's accurate, but also to see trends, right? How is your business is doing, to plan for cash flow. So run the report, always run it by, you can run a profit and loss and do 12 months by month, go 12 months back. And it's nice because you can go down and say, okay, how come this month I have a workers' comp payment, and then the next month I don't? What happened there? It's because you probably put it somewhere wrong, right? So that's help you to check yourself for the accuracy and also help you see trends. Also, resolve any suspense accounts. Suspense account, that's stuff that the software, the accounting software just put in there because they don't know where to put it, or things that's just not matching. And so you need to resolve that. So look at those suspense accounts, because if you don't resolve that, that's a possible tax deduction that you're missing, right? Balance sheet, talk about that. Making sure that your cars, any large tools that you purchased this year, that is on the balance sheet, that is being amortized over time, so that you can write it off. Make sure your EIDL loans and unforgivable PPP amount are on the balance sheet. Big one, guys. If you use a bookkeeper put things that they think are not business related into owners or shareholders drawer. Anything that you see in that area, you're paying taxes for it. Okay, so make sure you look at the detail of the shareholders, owners, drawers, or distribution, and make sure that all those transactions are not business related. Because if it is, it need not to be in there. It needs to go under to the profit and loss as an expense. Otherwise, you're paying taxes, because what it is saying there is that's the money you take out of the business for your own personal expense. Okay. And then lastly, brings all these information, meet with the CPA and meet with a financial planner. What I am going to be doing in November is next week on the 5th, I have a session like this for my clients, and you are welcome to join, but to help them kind of self-check on most of the stuff that we talk about today. You can skip next week. But the following week, November 12th, we'll have a session where I am going to interview a CPA. And he is actually someone who the interior designer industry community is very familiar with, because Noel actually have had him on some of the webinars before. And so Mel Creighton, CPA, he's going to be in my office, actually, technically Zoom office. And I'm going to be asking him questions on your behalf, and he's going to go over what we need to do, how to plan for your year end. And then the following week is November 19th, I will have a certified financial planner on to talk about the same thing, the different type, a different way to shelter your tax or defer your taxes, that you can still have time to do it, but you have to do it now because we're already in November. So to do any tax planning for 2020, it needs to be now. You don't have a lot of time. Come December, it's already too late. Okay. So don't mean to scare you, but time is now. We just have to get on this. Do you have any questions? And what time is it?
It's 2 minutes to 11. I do want to make a comment though. I can understand for a lot of us that, you know, the topic is very intimidating, but what I want to emphasize to everybody is that Lisa takes seriously the educational aspect of this. When she talks about your profit and loss and your balance sheet, she wants you to understand it as well as she does. So if you schedule some time with her, please know that that's something that she'll walk through with you that's specific to your case. So I highly encourage you to schedule some time with her.
Thank you, Victor. Do we have any questions? We're good on time. I'm so excited.
That's perfect.
So, good. So yeah, this is a lot of information. I will email out the presentations, and then feel free to please email me, schedule time with me. I love to look at your books with you and make sure you understand your numbers. That's it.
Cool.
So I think we can unmute. You can unmute yourself, I think, if you would like to talk.
We have a quick question from Kim about an IRA contribution in the last minute that we have.
Okay, sure. So what is the question? Just what to do with it?
Kim, would you like to be a little bit more specific? You can feel free to take yourself off mute.
Hi, yeah, can you hear me?
Kim. Yes.
Yeah, I have a sub S corp, and I would like to make an IRA distribution. So I was just wondering if I'm eligible to do that.
You say distribution, you mean contribution?
Yes,
right? To set up a plan. Okay. So the S corporations, you can, if you set up an individual retirement account, it is actually a personal plan. It wouldn't be going through the S corporations. If your S corporation have other employees, you can set up something like a simple IRA, and in that case, the company can make contribution to your plan as well as you as an employee make contribution to that. you are more than welcome. Like when I have the meeting with this, if you have your own financial planner, by all means, talk to him or her. Otherwise, on the 19th, I'll have the financial planner here who can answer that question much better. It's very easy to set up. It's a retirement plan that you can definitely set up, but it would not have anything to do with your S corporations. I have seen small businesses write checks from the business to make contribution into their individual, their IRA, and that is incorrect. So what we do in that case is we actually put that money over in owner's draw, as you just pay yourself, you technically pay yourself, and then you take that money and put it into the IRA. Does that make sense?
Yeah, thank you so much. That really
welcome.
answers my question. Thank you.
Good, good, good. All right, everybody. I wish you the great rest of your day.
Why don't we have a bathroom break, and then we'll get onto the second part of the webinar in like 3 minutes.
All right, and this part we'll have drinks.
Thank you, guys. Thank you, Victor. Thank you, Candria. Thank you, Lisa Wynn. Really, really appreciate all your insights. Thank you for all the designers and architects who chimed in. Yep. Do what you need to do the next few weeks to wrap up your 2020, and then we're all going to live happily ever after.
Sounds good. So let's see. I think I have a. There you go. Thank you, everybody. And if you want to check us out, smartbeaninc.com is our website. We have a lot of our information on there that you can check us out.
Cool.
Thank you. Bye, everybody.
Thank you, Lisa.
You're welcome. My pleasure.
Take care, Lisa.
Take care. Bye.
Bye-bye.